Christian, it's a real pleasure. As we're setting up the call, there's like so many different areas we could speak about. I guess I'll ask the question that I have is, when do you think you'll fly again?
Yes, that has been asked. I think the downside of putting up posts is that people then ask you about it. Um, I think when I went through the whole logic of thinking about it, when back in the pandemic days, so March last year, I did a quick sort of okay, when would it make sense to fly? And I think I had come up with the October or November as a timeline, and I actually ended up flying in October. I went to Vancouver, and I realized it didn't actually make a large amount of difference because on that flight I ended up meeting some folks, but I was coming from Montreal, which is Plague Island for the Vancouverites. And so while people were okay meeting me, they stood at the other end of the room. There was always like, 16 feet of distance. And so any advantage of being live in terms of relationship building or in terms of connection was completely negated by the fact that, I was coming from a place which had a high case count to a place of low case count. And people reacted that way, which is kind of interesting to me. It did give you the feeling of coming from Plague Island. Um, so I haven't flown since then because I don't think it's kind of worth the effort. And then I think now, I think I posted it up, but I think the a lot of if you work through by the time that people get enough vaccine to sort of make that impression of distance go away, which the perception of okay, I'm safe to talk to someone, which is going to be a lot longer than the actual rollout. You're talking, deep into the fall. So I think the next logical time to fly would be into the fall because I think that's where the value of flying would actually start to kick back in terms of creating relationships or creating networks. Prior to that, you might be able to fly perfectly well, but people are going to react to you in such a way that to negate a lot of the, the, the value.
Yeah, the benefit, yeah. And I find you mentioned the social element, right? One is going to be the legal one. When can you fly, or when you're allowed? But then when is it going to be okay for everyone to go to Cuba, and not just, let's say, one fringe element? I want to come back to this article because I think you raised a few points. I'm going to come back to it later. I have a question that I keep in mind. I do want to tie it into maybe some this article early in your career. Talk about the pandemic. You used to do cancer research, so I'm just curious as to how did you get interested in cancer research?
I was in university and I was a biologist, and I actually thought it was I was trying to figure out which area of biology to sort of focus on, and cancer just came up because it was one of the most interesting areas. We knew so little back then about the different types of cancers. It was to me it felt like exploring an export country, right? Like you always want to go where not too many people have trod, and cancer was. I mean, a lot of people knew of it, but it was like the amount we know compared to the amount we didn't know was quite significant. So uh, I ended up meeting some. I think I met somebody who was ill with cancer, and as a young biologist, that marks you because you're studying all this stuff, but you don't actually think of the practice. I mean, you see all you read about the theory of the biology and everything else, but it was my first exposure to someone who's actually sick and dying of a disease that I was kind of reading about. And I think that was the motivation. I ended up saying, okay, well, that seems like a good thing to focus on. And then we ended up coming up with an idea for treating certain types of solid state cancers. And yeah, and then kind of my entire sort of world kind of shifted towards doing that. And that was fun. That was kind of how I became
Yeah, I'm
from a
gonna
biologist to
we're,
a cancer researcher.
we're gonna maybe go between the past and the future. But do you think there's a tie-in with what you do today? Like the rise of cancer cases, your focus on sustainability. Do you find there's a tie-in, or am I stretching the elastic a little bit here?
I think if there's a tie-in around, I mean, COVID's had a bunch of impact on everything, obviously, but I think cancer is essentially a catch-all, right? Like cancer is essentially what happens when things don't go right. Your body is a very tuned machine, and cancer is essentially the fail-safe or the problem that happens when it's none like you ran out of oil on one system or one system gets out of alignment with the others. If you don't fix it fast enough, you get essentially a cancer, right? So it's actually a good gauge as to how well your body's working overall. And I think the only thing that I think the link that makes the most sense to me is that we have seen with the pandemic much more of an increase in focus around, okay, well, how we can't stop certain, like, the whole idea that we can't change certain things, the inertia has been completely upended by COVID, because all of a sudden, because of a virus, we essentially, shut down entire sections of the economy and change everything in how we operate, right? Well, I mean, cancer is to a large extent a, a is going to kill far more people than COVID ever will, right? And while many cancers are not preventable, many of them are. And I think, if anything, it's shown that if you've got enough of a motivating force, enough of political agenda, enough of a media sort of presence, you can actually tackle some of these diseases by changing things that up until 2 years ago you would have said, oh, that's, we can't ever change it. I think that it's going to stretch beyond just cancer. It's generically, and even the stuff that they've, like, for example, the biggest example is the mRNA vaccines, right? I mean, mRNA vaccines were science fiction up until 2-3 years ago, and I don't think anybody expected them to go so fast. And now they're used, obviously, for COVID, but you could do a lot of things if you're willing to throw in the kind of resources we've been doing at COVID towards that. So I think it'll be interesting to see post COVID, what do we select as? Do we simply go back to normal, where spending goes down, and we go back to the pace of very incremental change that we've seen for the last 30 years? Or do you start saying, okay, well, if we can mobilize these kind of resources, let's do a fraction of that, but let's focus it on X, Y, Z, some really breakthrough medicine. And then I think you could tackle a huge number of these diseases much faster than we've been doing in the past.
Yeah, it's a fascinating insight, right? It's what, the expression of necessity is the mother of invention. The fact that we're in this pandemic has caused, like companies to accelerate their investment, and we saw it with mRNA, which is a fascinating technology, which has so many
Right.
different applications beyond just COVID, right? And hopefully will help cure and save millions more lives. I'm going to
Yeah,
bounce
and even
back
the
maybe.
very notion you've got, sorry,
Go ahead.
even if you've got the notion that going from design to roll out of a vaccine in a year, that is very impressive, right? If we could do that um, with a lot more disease, even with existing technology, just bring the rollout to a much larger, on a much faster pace, you could do some really incredible things on the healthcare side.
Yeah, and I think the inside story for Moderna specifically, I think they were able to replicate, like create the cure or in over a weekend, basically.
Yep,
I think it was like just using software. So I think that's a radical change.
that's
I
pretty
want to
cool.
go back maybe to earlier in your career. So you went from cancer research, then you joined, you eventually became a junior partner at McKinsey. Maybe I won't talk a lot about McKinsey, but you're also someone that, is a mentor to our business and has helped us understand the ins and outs of consulting. Would you recommend for someone in their career, as you were back then, a job in consulting? Is it something that you think is still a career path? Of course, now there's big tech that a lot of young people gravitate towards. So curious to hear your thoughts, about consulting as a career path.
I think it's still a pretty good idea. I was a pretty good biologist. I mean, I came up with a bunch of really cool notions. We did really, interesting stuff. We raised money. I thought I really knew how to think in a very structured way. And then I joined McKinsey on the consulting side, and they had a very different way of thinking about things, and I actually learned quite a bit. Um, I do, it's not for everyone, and there's a number of people who I think would have an allergic reaction to consulting, and there's a number of my friends over the years who asked for, my advice or my opinion on whether they would make good consultants, and sometimes it's like absolutely, and sometimes like, look, you got to figure something else out. Please do not even try to go down this path. There's a certain chemistry that people sort of either like or hate about consulting. It's not for everybody, but I think if you can learn if you do sort of fit into that mold that can become a consultant, then I think learning some of those skills is really useful. Everything from how do you communicate an idea, to how do you structure a really strong problem, to how do you sort of do you lead a group of folks. I think these are fairly useful skills in any domain, and I've never seen any industry that teaches them to you as fast. I've seen a ton of startups, and I've seen a lot of people sort of learn on the startup because the startup is scaling so fast. They learn a lot of things, but it's not super structured, and they never. You often see those folks with a lot of gaps in their thinking, or a lot of gaps in their skill set, because they were forced to scale much faster than normal. I think consulting gives you a pretty good basis to sort of learn those skills. Is it the best career for everybody? No, but it's for those people who can do it and who sort of have an affinity for it. Uh, I have yet to see a better school. Like very few other places in 3 4 years, you're going to learn communication, leadership, structuring, and then whether you choose to use them in the next gig or not, up to you. But you're going to see some folks who have spent 40 50 years perfecting these things to their apex. There's McKinsey, BCG, Bain. They've spent 40 50 years really figuring out what's the best way to do all these three things. You're not going to figure this out on your own by simply a random walk, right? It's just not going to happen. So why not take the lessons? Why not take the learnings?
Yeah, it's a huge accelerator in terms of learning, right? Like even for myself, just like running a small consulting firm, it's like I feel like so
Right.
clueless in a few years. How did you make the jump to being an investor? Was that something that you always were curious about, or just naturally came with your skill set?
No, I mean, I'd been a consultant for a while, and we had started a consulting firm called GH Smart, and um, a lot of our clients were private equity folks. So I kind of saw the world that way. And really, the move to investing was around the idea that when you've been a consultant for a while, you start getting strong opinions about how things should be, and after a while, you you kind of have to make a decision, right? You either sort of continue being a consultant, which is fine, or you say, okay, well, I can do some of these things. Let me go and try. But in this particular case, it was the chance to become. I got the opportunity to invest, but invest very specifically around climate change. And I was getting increasingly kind of interested and worried about climate change. I'm a biologist, and so I was reading the literature. And it's rare that you read sort of scientific papers or reports that have sort of the words like cataclysmic and catastrophic and we're all going to die. And so eventually you start reading that stuff, you're like, well, I got to do something about that. So it was the impetus of I became an investor mostly because I wanted to put some of my ideas into practice, but mostly because I needed to find some way to actually start dealing with this the climate emergency thing.
Yeah, and pretty much like we are talking about COVID before, it's like a very short, acute situation that's maybe in the category of cataclysmic, but over a longer time horizon, I can't think of anything else beyond climate change being as important, right? The subject of this century. So if maybe just for the sake of our audience, walk us through Springling Capital. What do you guys do? What do you guys invest in?
So I mean, when Springling is one of so back a few years ago now, I ended up talking to a number of people who were also investors, and we all started to think about what would it take um, to scale companies to the point where they can actually address climate change. Because the issue with climate change is not that we don't have technology. We actually have a fairly large amount of technology to deal with climate change, and frankly, the issue of climate change is more of a political one than a scientific one. I know some people disagree with that, but I've been in it for a while now, and that's my opinion. The um, but to address the sort of to actually start seeing real changes, you need to have scaled companies. You need to have scaled things. So it doesn't really help you if you have the world's greatest batteries, because batteries are hot now. I can have the world's greatest electrical battery. If I've got one of them, I'm not going to create any value whatsoever. I need 10 million of these. The first one to get to 100 million of these will start moving the needle a little bit on climate change. And so, in some of these early conversations, we start all thinking about what is it that would actually scale companies. And for us, for Spring Lane, what our answer was that essentially the single thing that was missing for a lot of these companies is project finance capital. And project finance capital is not something you read about in, like most tech investors, most tech players never heard of it. People are familiar with venture capital. People are somewhat familiar with private equity, traditional, buyout, where you're essentially buying a company by buying its equity. Project finance isn't as hot. It's not in the news. It doesn't. It's kind of most CEOs I talk to don't have never really sort of thought about project finance. But project finance is how most of the world gets built. Most things get built not because people want to own the equity, but it's this kind of weird capital that essentially is very well suited to large scale projects, large scale deployment of things. So if you think about sort of the way that transmission grids are built, the way that roadworks are built, the way that large plantations and farms, all of these large things tends to be built by using this form of capital called project finance. And um, traditionally, the world of tech and the world of project finance are completely separate. They just don't talk to each other, because if you're running a company that can scale with just a number of servers, and you put them in California, you have a bunch of server farms in California, you're never going to need project finance. The folks who need project finance are folks who are putting metal in the ground somewhere. And the more and more the early companies around climate change, the ones that were starting to develop solutions, started out as tech companies, and so they had this sort of a tech mindset, which is, we're going to raise rounds and rounds of capital and then build our technology and then put it out. But they quickly run into this problem that, if you want to change the way the world works in terms of transportation, in terms of power, in terms of food, in terms of water, in terms of waste, you're going to need to put out billions and billions and billions of dollars, and you're not going to raise that as a tech company. It's just not going to happen. The odds of you succeeding are incredibly small. Some have succeeded, like Tesla has managed to do that, right? But Tesla almost went bankrupt like 4 times, right? And it was a stroke of luck and Elon who managed to pull it through each time. Anything else we wouldn't even be talking about Tesla, because it would have died a number of different times. So Spring Lane exists really to bridge that gap. So we are a large institutional fund that's project finance, bringing that form of capital to sort of tech startups, with the idea that we're going to help them roll out the technology from the first battery to the 100 millionth battery, if we did batteries.
Yeah, so
And
it's like if you're building a hydroelectric dam, for instance, well, that's a one-time project. You hire people for X months and then it's done. Do you see a link where eventually the two worlds will blur, or is it too soon? Yeah, you can think of how software will permeate a lot of these projects, and then that software, like you said, is a one-time expense, and then you deploy it globally. Or is it still very much you think you'll be, to actually address this issue, you'll need to have.
software is an enabler. Like, software allows you to do a number of things. We're seeing, like, one of the biggest trends I'm seeing these days is this trend to, we're starting to replace, as we're grappling with the realities of climate change, we're starting to replace this high carbon central infrastructure with a low carbon decentralized infrastructure. And the only reason we can do that, frankly, like, you can think of it as replacing a power plant with 10,000 solar rooftops, say. The only reason you can do that is because of software, right? Because essentially, the true cloud infrastructure, software, a number of different innovations, you can actually control a number of decentralized assets without having the need to have 4 or 5 people on site at each site. So you can actually take the technology and actually roll it out and then control it centrally, but have it distributed where it's needed without having too many problems. And I think uh, the one of the biggest trends we've seen over the last few years has been the ability of companies to create solutions that can be rolled out into the field at relatively low cost, because they don't require a huge amount of support infrastructure. While the support infrastructure stays central, the sort of the actual infrastructure gets rolled out. And that's a model that's going to be very powerful for a lot of the problems, or the new solutions to the problems of the industries that are going to be targeted with climate change: energy, food, water, etc.
Yeah, so a lot of the solutions will be decentralized to a certain extent, right? So it makes for investing in local opportunities probably more interesting or more appealing for, let's say, local governments that want to build up. And and in terms of limiting factor, is it one of not enough capital to accelerate, or one of not enough opportunities, or is it maybe even the wrong frame to ask this question?
I think it's a matter of maturity. There's not a lot of capital like ours, but it's starting to grow. And then I think CEOs and management teams haven't really learned about this stuff. I'm always surprised if folks are very comfortable with VC type term sheets now, and that has permeated the collective consciousness of tech, I think, to a large extent. A project finance term sheet looks really different, and it's a next level in terms of complexity, in terms of thinking through what the future holds, because project finance is inherent. Venture capital term sheets are often, we're going to give you money and then we hope you do really well. So here you go. And it's often about how we're going to split up if you happen to win, because they know that in 9/10 of the cases, they're not going to make their money back. And in the 10th case, it's all about who gets what slice of the win, right? Project finance isn't that way. Almost every project finance project actually gets done, and then the question is really how do you structure the cash flows so that it makes sense, so that these relatively small companies can roll out these long-term, large-scale projects. And that's very different than traditional venture. So I think it's an education of the management teams as they're starting to roll out, as tech companies hit the reality of the market, of these markets, which are not, internet. It is atoms. It's not electrons. It's atoms. It's food, water, things that move, things that people sort of want to touch and feel. They're slowly getting to the point where they're realizing, okay, well, this is kind of what I need to think about. A form of capital is going to be different than what I've done in the past.
Yeah. I want to come back to maybe valuations in the space and how you think about investment, but maybe a definitional question is, how do you define sustainability? I find it's become a bit of a buzzword lately. It's like very loaded as a term, obviously with good intentions. But we're curious to see how you define that term.
I think it has become a bit. I mean, and it'll continue to be right. Like, I have seen somebody, bringing to us things like, "Hey, we have a sustainable oil and gas platform," which you start asking questions like, "Really?" It's like, I think sustainability. I think the context of sustainability is hard to define generically, but the question I ask myself when I see a deal is, could you do this long term without a huge amount of um, damage to the external environment? And I think that's been the problem of a lot of our sort of infrastructure to date, has been that we put it in place and we don't price the externality. So you do something, and okay, well, what it does is it creates massive problems somewhere else, but because that somewhere else isn't priced, it's not owned by someone, or it's the oceans, or it's the air, or it's a resource that's commonly shared. Since we don't price it, it allows me to put in place this infrastructure, or this this thing, and then price it just at just price it for at relatively low cost compared to what I should price it if I was going to clean up after myself. I think sustainability ultimately is this idea that you do something and you price it appropriately so that you don't have a ton of externalities, so that I can deploy something and then not have a associated problems that spring up just outside of my sort of field of control. And the easiest one is obviously carbon, right? So the obvious one is we've done a ton of stuff over the last 100 years that have created massive amount of carbon in the air, and then we're all going to pay for that. So I think sustainability is around being able to generate the what you want to do, whether it's water treatment, food, etc., without creating as much externalities as we used to in the past. And I don't think it's ever an end state. Like, we're right now, we're the new solutions we're deploying are much better than they were 50 years ago, 20 years ago, and the ones we're going to deploy in 20 years are probably going to make the ones we deploy now look even better. But as we learn more things, hopefully that's kind of the directionality, is that we're becoming more and more sustainable. But I think people who think it's a sort of black and white are missing the point. There's almost nothing we do today that is truly 100% sustainable. Very, very low. Most of it is much more sustainable than what we did in the past, which is progress, right? Like, we're destroying the environment at a slower rate. And at some point we get to the point where the environment's capacity to regenerate exceeds our damage, and then we're truly sustainable. We're not there yet, but we're getting closer. And the real question around climate is, it's really those two curves about how fast we're improving versus how fast the environment is deteriorating. That's going to determine our future. If those two curves don't meet for a long time, most of us are going to die. If those two curves meet faster, then we have a chance to, maintain some semblance of sort of normalcy.
Yeah, I think it's a great way to visualize the survival of humanity on this XY axis. Is like hoping that the axis, the Y and the X cross faster. I want to go back to investment, right? In the space, do you feel that your valuations are high in climate tech? Are they approaching, like, 'cause, a lot of people maybe rightly or wrongly are saying there's a tech bubble right now, particularly when it comes to just pure tech and software. Curious about your space. Do you feel valuations are frothy? What does the investment climate look like?
I mean, it's still not a hugely compared to the rest of the market. It's still not super frothy, but it started to speed up. Um, I mean, I think in sectors where there's a halo effect. So, take for example electric transportation, right? We've seen a lot of SPACs recently kind of get created, and then they're buying these companies at ridiculous valuations. And you would think that those valuations don't make any sense, but then you sort of look at the industry, and they're all being indexed essentially on Tesla. They're all bets that there's it's not, if not the next Tesla, it's that Tesla is going to move the entire market up, and then all these players, these higher valuations will make sense. I think that's part of it, and I think that the main reason we're seeing pretty big valuations in our world is actually fairly fundamental, and that's got to do with, I think 10 years ago, I used to go to investors and my peers and say, look, folks, we got to invest in climate because, again, if we don't, we all die. That's what an existential threat is. So let's figure this out together, and we'll make money. But the making money is how we make these things sustainable over the long period, right? And today, that pitch is different because today the growth areas of a lot of these verticals has become the sustainable alternative. So for example, if I'm investing in transportation today, I'm investing in electric transportation, not because I want to save the planet, but that's just because where all the action is today in transportation. There's not a lot of people bringing a combustion engine startup to market and saying, oh, you know what the future is, it's my extra large diesel. It's just not a thing. Same thing in energy. If you're an energy investor today, you're investing in renewables because there's not a lot of people bringing to you I have an incredible coal startup you got to see. That's not happening because the markets has spoken and said we want the more sustainable alternatives, and so therefore they're the ones who are driving the growth of these sectors. So does it make sense for them to be starting to be valued more? Well, yes, because they represent a tremendous opportunity to replace very old assets with very new ones. But I think a lot of people are coming to sustainability whether they want to or not because of that dynamic.
Yeah, that's a really interesting way to frame it. I'm like curious to see where all the coal startups are. Maybe try and find one for the podcast. I want to go back to your article, right? So I'm going to link to it in the show notes. You mentioned about you look to the past as a guide to the future, right? So you look to the 1918 pandemic and how kind of an indirect consequence was the formation of Hollywood, right? As a result. If we look to maybe this current pandemic, maybe it's a bit too soon to tell, but do you see any industries being formed or any significant changes occurring after the pandemic, like a whole industry, like of entire industries? I think you mentioned climate as being probably the biggest beneficiary of the acceleration of these trends. But curious to hear you if you have any other ideas on industry change as a result of the pandemic.
I think one of the biggest sectors we saw as part of the 1918 sort of changes was post 1918, the world moved towards a very risk averse stance. And that's where you saw life insurance take off as an industry, for example. That's where you saw um, states basically forcing governments to preempt crises, especially around healthcare, whereas prior to that, the risk mitigation and sort of resiliency became the tone of the day. I think you're going to see some of that too. And I mean, you're starting to see that in a number of different sectors where the definition of what's risky changed. If I had told you 2 years ago, by the way, you should know that, like, I don't know, pick a sector like hotels are super risky, you would have said, well, no, I mean, that's a very stable industry. It's in 19, like a lot of the industries, like going back to 1918, cinemas were seen as particularly, it was a growth area back then, right? Like there was a ton of studios, there was a ton of exhibition house, essentially cinemas that were propping up, and people thought this is great because people love movies and people are going to do. Cue the pandemic of 1918, no one wants to go to the movies, the entire industry collapses, and essentially 3 or 4 players buy up everything, and they create the golden age of Hollywood. The golden age of Hollywood was entirely driven by the pandemic, because essentially it allowed 3 or 4 players to buy up both the studios and the cinemas and create a star system that gave us Marilyn Monroe and James Dean and all the sort of the golden age stars. I think you're going to see similar things here around. COVID will force a certain mindset. The mindset is going to be one of, I don't know what it is, but we'll wait and see. But it's very clear to me that the pandemics changed not so much during the pandemic; they changed people afterwards. And I think, for example, one impact I've already seen right now is investors have gotten incredibly greedy. Whereas, pre-pandemic, if you were getting your 6% returns, that's great. You were happy for 90% plus of investors. Today, after having seen sort of the incredible run up of the tech firms like Apple and Tesla and all the others, people have gotten 20, 30% returns. And that's become kind of the goal in many cases for a lot of folks. Is, well, why can't I do that? And as a result, the sort of the hyper growth mentality has really set in with a lot of investors, especially retail investors, but folks who want to see the growth. Like this sort of path just doesn't cut it for. They want to see this. Now, of course, that's unsustainable. There's not, but I think that desire is being driven of 2 years of hearing about how these companies have done incredibly well. So I think you're going to see some changes. They'll take a while to work themselves through the system, and they're going to cause people to go left and right. More. They'll cause probably more damage long term than the pandemic did.
Yeah, that's very interesting. I find the M&A consolidation piece another one too that I think is lurking below the radar. But a lot of these companies have a lot of capital to be able to acquire, and so I think we'll see a lot of that in the coming years. I want to ask you a question in regards to maybe something that you're paying a lot of attention to that is maybe not commonplace. You mentioned project-based financing, which is one which is growing in importance. Do you have any other areas that you think don't garner enough mainstream press and should, and you think they will be important in the next few years?
Um, I think there's a few of them, like the. So I, I'll take an example. I think there are sectors more than forms of capital, but I'll give you an example. Waste, right? I can't I can't think of anybody who's published anything interesting on waste in a while. And no one cares about that sector. But waste is one of those things where if you have actually paid attention, it's been massively disrupted by the fact that we can't ship as much stuff to Asia as we used to. That nobody wants to permit landfills, and waste has become a real problem in a lot of different sectors that needs addressing. And it's one of those things where people like it's not a nice to have. It's if you have an industrial plant that's generating waste, you're going to need to figure out what to do with it. If you're a city, you have to collect it every day. And so there's been some really interesting innovations in the waste sector, which have been fascinating for us to watch. And it's not a sector that had any innovation for or very incremental innovations like for the last 20 years. And now we're seeing some really interesting plays coming to the fore, new ways to treat the waste, new ways to leverage it, and it's a sector that's completely under the radar because it doesn't have a halo effect yet. Tesla created the halo effect for the electric transportation, so now everybody who's got a battery startup is in is in play. Waste doesn't have a sort of a halo creator, but I think that you've got, as an investor and as a player, you have far more interesting plays in those sectors that are somewhat out of the limelight because they're still doing very cool things. The same things that are driving the factors I talked about, decentralization, the sort of that they're acting in all these sectors. And I think it's just that some of them become hot and so attract a stupid amount of capital, a stupid amount of action. But there's entrepreneurs who are doing incredible things in the other ones as well. They're just not operating in the same limelight. As a result, evaluation and pressure and everything else become completely different. So I think I don't know that there's a form, I wouldn't make the case of just on the form of capital like seed versus project, etc. Yes, there's, you could use more of X, Y, and Z. But I think it's really about sectors. And it's really about sort of understanding which sectors are driving which sectors are going to be driven by these fundamental changes, regardless of what necessarily the headline is pointing, because the headlines tend to follow success. They don't preface. You hear about the great things about electric vehicles 4 years after Tesla emerges as a winner. You hear about the success of sustainable food 4 years after Impossible Food and Impossible Burger went to. So the headlines follow success, but the whole trick of positioning these industries is to understand where will you see the next one. And even if there's not one singular sort of breakaway winner, you can have entire sectors that are growing quite extensively in terms of scale, in terms of disruptions, in terms of profitability, where no one really is looking at.
Yeah, I find that fascinating. Like another way to look at it is like a lagging versus a leading indicator, right? Like, all the media covers the lagging indicators, but the real innovations happen years before when they're in the dark in their basement, and that's So I find this conversation is great because I'm now deciding like waste is an interesting industry to keep an eye out. Are there other areas that you're excited about, companies or technologies? Like, I think one area for me, just a personal interest, is carbon capture. I find that one is going to be, growing in the next few years. Are there other similar types of technologies that you're excited about?
I think the question is for who, right? I mean, carbon capture is a good example where, one of my roles because of my is I've been advising a few governments on what their green recovery, the governments who are trying to create, recovery programs to recover from the COVID pandemic, trying to figure out how do you make that recovery green as well. And one of the interesting things is we often get into this debate where, just to stay on the topic, for example, all these governments are seeing the threat that electric vehicles are posing to their traditional manufacturing base of, normal, whether you're Germany, you're looking at the fact that, most of your, actually one of their single biggest employment is traditional car making. And you're looking at electric vehicles taking a huge slice of that. Even if the same companies survive, it takes about 1/10 of the complexity to build an electric car as it does a traditional car. Now the complexity is different; you need more software, etc. But in terms of the people, it's a lot less. So these companies are looking at how do I deal with that, and so they've had to essentially pay to attract. So Germany, for example, and France and Canada passed these very large checks to try and attract the electric vehicle startups and companies to their regions. You have to write like 9 or 10 figures. And that's because it's a proven thing. Now, go back 10 years. If you went back in 2011 and said, what kind of check would the government need to write to attract every electric startup in the world? It would have been for 100 million, everybody would have moved but it wasn't a sure thing then, right? They had to take a gamble. Carbon capture is exactly that, where I've actually had this conversation a number of different times where I would say, look, on paper today, carbon capture makes no sense. It's a financial black hole. There's no mechanism to warrant it. But hold on, the cost curves start to come down. If the technology is starting to look interesting, if you had a revenue model around taxation or around credits or something, you could actually make this work. Today, if you're a government and you want to attract all of the carbon capture, it's $100 million, and you're going to attract the best and the brightest to your shores. In 5 years, in 10 years, you're going to need to write into the tens of billions to deal with that. So I think a lot of when you say what's interesting, I think it really depends on who you are and what you want to play. If your interesting is how do we drive these technologies and these verticals, these industries, so that they're part of our ecosystem as a country or as a state, then you have to think quite ahead of time, because otherwise you're paying a lot of subsidies and you have no guarantee that you're going to be able to do. Even if I write a $20 billion check today, will I be able to attract some of the best electric batteries manufacturer to come? Maybe, maybe not, right? Everybody's writing similar checks, so it becomes a game. I think increasingly being reactive becomes really expensive. And that's across everything I've seen. For governments simply to react to the environment, say, okay, well, now we get electric vehicles, and now we write checks with so many zeros we can't count, because your alternative is to lose a huge amount of your employment base. That's reactive, right? And I see the same thing with some industries where the pandemic and others, to go back to where we started, have shifted the perception of risk. Previous to that, risk like cinemas were not risky. Well, now they are, or now they were. Um, Oil and gas. 5 years ago, you would have said oil and gas, safe as houses. Well, now you have a real threat that oil and gas will become stranded assets in a much tighter time frame than you would think. And you don't want to be the last guy holding the bag. You don't want to be the previous to last guy holding this. So where does the line sort of go back? So I think the I find a lot of sectors are really interesting, but the question really is kind of how do you want to move into them ahead of the point at which they've become so dominating that you have zero advantage. You're forced into it because you don't have an alternative. If you want to be in charge of your own destiny, you have to control it, and that means looking ahead and trying to understand where that's going to go rather than reacting to the environment.
Yeah, it's a fascinating way to look at it, right? You could kind of like on a 3D, chess puzzle. Maybe I could ask you a million more questions, maybe one or two more. On the political front, do you think that what you just stated, the sense that the technology is improving, there's a lot more impetus for countries to move? Do you find that we'll be able to get political solutions to these problems on a faster clip than before? The world wasn't changing as fast, and now we've kind of had the impetus. Well, we kind of need to change. I'm curious to hear you riff on a very tractable and human problem.
I don't know that people have changed. I mean, everyone wants to. There was that. I often think back to the fact that the movie that started a lot of pushback was The Inconvenient Truth. That was Gore's movie. And whatever you think of the movie, the name is actually surprisingly sort of effective because the whole sector, this whole thing, is not something that people would have wanted. In a perfect world, we wouldn't have climate change, we wouldn't have global warming, and you could just continue doing what you're doing and not price those externalities. Nobody wants to price in the externalities. I think political desire has been like progress on climate has been stymied by largely the fact that politicians can't think 40 years out, 30 years out, 20 years out because they're not going to be in power, and nobody's going to give them credit for things that are going to help them. That's just normal. I think the biggest change that I've seen in the last few years has been that now the pain is becoming real. And as a result, there's an urgency that has never existed in the past. So, for example, take I'm not going to take electric vehicles because I keep using that word, but take, for example, fish. If you see the sort of the reports, fish stocks around the world are declining at this incredible speed. I mean, it is literally a line. I mean, they're adding paper at the bottom of the page to show how quickly the line is dropping. And fish represents the majority of protein for most of the world, especially the developing world. And all of a sudden, this is not a 20-year out problem. This is a today problem. Now, are we going to be able to fix it today? Probably not. But we've been sounding alarms about sort of, hey, the fact that carbon dissolves in the water and that that's going to affect fish are particularly sensitive to temperature. So we've known about this problem for a while, and it does this, 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 and then suddenly it becomes here. This is the point, sadly, at which we can react. Now that's late in the game, and that's the case, I think, with most states. That we are reacting to climate, but we're reacting very reactively. And as a result, the damage that I think we'll survive climate change. I think, we'll probably win this war in the long run, but we could have won it with very little damage and very little collateral damage. And now, if we are going to win it, it'll happen with a lot of damage and a lot of pain and a lot of suffering because we're forced to react when the curve tips up. And aquaculture is one of those things where now you're seeing all sorts of actions on the government front around protecting fish and protecting the environment. But of course, you can't do that because you don't control the ocean. If the ocean's warming up, you can have all the policies in the world. You're not going to help the fish. So there are some solutions to that, but they're coming in now. But for the first time, you see people like freaking out because if they don't do anything, then literally voters die. And unfortunately, that's the kind of the level of urgency at which you can get fairly urgent reaction. COVID has been interesting in that it forced people to think about, okay, maybe if we acted a little bit ahead of the crazy emergency, it would be so much easier. But we'll see how much of that mindset stays after COVID.
I certainly hope it does. And I really find that, like you said, there will be some interesting opportunities for companies and for investors like yourself to kind of like accelerate this. Christian, I want to be respectful of your time. Maybe a final question is, where can people reach out, get in contact, and learn more about what you're doing at Spring Lane?
Yeah, I mean, they can easily send an email at info@springlane capital.com. We do monitor the line, and it's usually a good way to connect them. Usually, we get a lot of requests for folks, interested either in careers or in other things, and we can act a little bit as a connector to the rest of the community too. Because there are other investors. We are not the only investors in that space. There's a lot of investors starting to, or who have been, fighting the good fight for many years. So we'll happily connect people if need be.
Christian, thank you so much for your time. This is great.
Anytime. I appreciate it. Take care.